Getting your prices right in your business is the most important thing you can do. It's a really easy calculation, and you'll be surprised at how far off you might be or how close you might be to the mark. The most important thing is that you write this down and that you get your numbers right. Without the numbers being right, you will always be behind the 8 ball. You won't be able to create a business for yourself, for your employees, for your family, somewhere that people can create a career, and you won't be able to service the community. So getting your pricing right is crucial. Stick around to the end because I think you'll be very surprised at the findings, and I've got one tip to show you that I think will change everything. It certainly did for me. For those of you who don't know me, my name's Mitch Boerner, and I'm the co-founder of Legendary Plumbers. We're growing up, scaling up, and building up a plumbing business here in Melbourne, Australia, and I'm here to share with you what we've learned so far. Let's get started for today. So getting your numbers right is super important, and the way that we work that out is billable hours. Billable hours. Okay, so billable hours, what do they mean? There are 260 actual work days in a 365-day year, factoring in all the weekends, everything like that. Let's use a standard employee setup so that we can kind of get a better idea of how this actually works. 260 work days. They're most likely going to have about 20 days a year in annual leave. Let's say 10 days sick. That gives you 230 billable days in the year. So your employee is most likely to come to work 230 days a year. Even if it's you, you're probably most likely to take at least a couple of weeks off, and you're going to have a couple sick days. If you're working weekends, add the extra weekends in. This gives you 230 days of the year that you can be profitable and that you can make money. You need to take out your spreadsheet or a piece of paper or whatever it is you might do, and this is how you're going to calculate how much you need to charge per hour, and I think you're going to be very surprised. I'm going to do a basic business where you're the plumber or you're the carpenter or you're the electrician, and you've got one person in the office who takes the phone calls, they do the bookkeeping, they book you in, all the rest of it. Pretty standard setup. 2 employees in a small warehouse or a small office. Let's go with that. So let's say you've got someone working for you. You've found someone, you pay them $60,000 a year to answer the phones, make bookings, things of that nature. You've got a small factory or warehouse, $20,000 a year in rent's not unreasonable for something like that. Let's say $10,000 a year in, let's say, car fees, looking after your vehicle, servicing, maintenance, fuel, loan repayments, whatever it might be, payment for a Jetta, whatever it might be. Let's put a few things in there. Just down the bottom, let's do $10,000 for marketing expenses. You had to buy new uniforms, you broke something and it cost you $2,000 to fix it, whatever it might be. So you've got $100,000 a year in expenses and overheads. 100,000 overhead. Let's say you're the plumber and you want to take home in your pocket every year, because the cost of living is going up, you want to take home $100,000, right? That's what you want. Clear in your bank account every year, $100,000. Now, in order to do that, that is, once you've paid, if you're an employee of the business, once you've paid tax, you're looking at $130,000 package. Superannuation, which you should be paying yourself even if you're working on your own, is $13,000, so it's $143,000. So that's your employee costs. That could be you, that could be anyone you want it to be, and however you want to work this out. Okay, $243,000 in total expenses. $243,000 in the total expenses for the year. What you want to do with this now is you want to work out what this costs per day. What we do, we take our 100,000 and we divide that by 230, which, if you recall, that's the amount of days in the year that we've got to pay this off. That's the amount of working days. That equals $434.78 per day. This becomes 43478. Okay, then you got your 143,000. 143,000 divided by 230 gives you $621.73. So 621, 6 2173. We need to put an equation together to have both of those incorporated. So overhead, $434.78, $621.73 equals 1,056.51. That is the number that you need to hit every day to break even. For you to get your $100,000 clear per year and your employee to get their $60,000 and you to pay your bills, that's your daily number. One of the mistakes that a lot of people make is they will add this up over 365 days, or they won't factor in sick leave. They won't factor in any of those things. So this is so important. All right, and let me show you the next one because we haven't even gotten to the best part yet. Let me explain this part to you because it's super important. So you've got your number here. What do we do with it now? Now, the reason you might have noticed I'm only calculating out the labor to try to cover the cost of the whole business. I think this personally is a smart move because then material sales kind of doesn't matter. Material sales, whether you put 1% on them or 100% on them or 200%, whatever it is that you want to do, you don't have to worry about it because you've covered the cost of operation in your business just on the labor alone. Problem with this is this means that the business has no profit. So while everyone gets paid, all the bills get paid, we're great. We have no rainy day fund. There's no profit. There's no money for a wrap on the vehicle. There's no money for a new tool, nothing. So you still need to add in your profit margin. Now, as we discussed, if you want to make a 20% bottom line, this is the labor and the overheads all together. So what we can do is we can calculate out our profit margin. Up to you what that number is for you. For us, that's 20%. So if we look at something like this, the first thing we do is if we want a 20% profit margin, what we have to do is we break this down into a decimal, which is 0.2. Cost, well, your COGS divided by 1 minus, and then the percentage that you want to make, 0.2, equals. So in this particular case, this number becomes $1,320.63 for a profit of 20%, which is $264.12. So this is what it costs you. This is what you need to charge out per day to make a 20% profit margin. And that's the profit left over. So you're going to get paid, your employee's going to get paid, all your bills are going to get paid, and there's going to be $264 left over at the end of the day. Not unreasonable, not a crazy amount of money. You can definitely work around this number and increase it over time. You will also sell materials and things on top. Now, what do we need to do with this? So if this is our new number, $13.20.63, let's do the next calculation. $13.20.63 is our charge out. That's what we've worked out is our daily number. Standard 38-hour week. You guys might do a different hour, but this is what we do is 5 times 7.6. So it's 5 times 7.6 hour days. The 0.6 is a half an hour lunch break and a morning tea. So realistically, it's 7 hours per day. That's all you've got to work with. Here's the big kicker, and I think this is the one where most people have missed the mark. I missed the mark and I miscalculated this, and we were undercharging for nearly 7 months. We're looking at this thing going, how come we're losing money every month? And this happened to us, and I'm proud to say it because we've learned from it. What is dangerous here is you can easily calculate out this number and go, okay, so 1320 divided by 7 is $188.66. Boom, $188.66. That's a going rate. Very, very wrong. Very, very, very dangerous. Apart from a very small amount of days in the year, there is, as I can tell you right now, because we have 12 staff here, there is very few times where you are able to book out a full day where you are getting paid for 7 times 188.66. Let me tell you though, if this is the case, if you work in a magical business where you are always guaranteed to be charging for 7 hours of the day, every day, 5 days a week, then that's your number. fine, no problems. I don't know a single business where every single hour of the day is factored in. If you are like us and you are like most that are doing this type of do and charge or emergency work, anything like that, you're still gonna have the exact same thing. If you're like us, the basic day starts something like this. If you've got your 7 hours, 7, 6, 5, 4, 3, 2, 1, you're gonna end up with the first hour being quoting to the customer, going inside, talking to the customer, having a look at what they've got. That's half an hour. Go back to the car, put a quote together, go back in, present it. That's another 15 minutes. They accept, and then you go to the supplier, pick up the materials. First hour is gone, and all you've done is pick up materials. Then you do the work. Great, you get paid for 1 hour. You've got 5 hours left in the day. You drive to the next one, exact same thing. You get a coffee on the way. You go to the job, they're not home, you wait 5 minutes out the front, you go in, you get the quote done, you get accepted, you go pick up materials. By the time you've picked up materials, hour 5 is gone. It's a 2-hour job, so beautiful. You got paid for 2 hours. Then the last hour of the day, you go back to the office, you wait for the next job to come in, the hour's gone, and then you go out and quote something, you do a quick tap washer, something like that. It's 1 hour at the end of the day. So your day turned in from 7 hours to 1, 2, 3, 4, let's say 4 hours of paid work. And that's a pretty good day. So most days probably look something like this. You never got the last job across the line. The last job got rejected, or they said no, they said it was too expensive, they said they couldn't do it today, whatever it might be. So that's your number, 3 hours. That's all you got to bill out for the whole day. What we found in our experience is the efficiency of employees, even yourself, is somewhere around 50 to 60%. Let's go with 50 because it's safer. What does that mean? That means that out of your 7-hour day, 50%, we change it to a decimal point, which is 0.5. 0.5 times 7 is going to give you 3.5 hours. So that's going to be your chargeable hours, your billable hours for the day is 3.5. Divided by 3.5 hours, that gives you a total chargeable rate for the day per hour of $377.32 plus GST, tax, whatever you need to do in your country. The reason I wanted to articulate this to everybody is I wanted you to understand the importance of making sure that that is done right, because this number here is the biggest number that everyone forgets. If you don't have this right, you are doomed. Unless you work in that mythical business where you're never not doing work and every hour is paid for every single day, that is it. And this might come as a shock because I know some of you are sitting in the forums asking what the daily rate is or what you should be charging or who's charging what. Who cares? Charge what you need to charge, because as you can see here, I didn't do any trickery. I haven't said stick $10,000 on a day for the customer, don't overcharge them. I haven't said anything like that. This is literally you taking home 100K and you having one $60,000 employee and about 40 grand a year in extra little charges and things like that. That's your number. $377. If you're not charging this, you are losing money, because all this has in it per day was, what did we have? $264 of profit per day. That's it. That's all you're going to take home your pay, and you're going to left with $260 in your pocket. This is not unreasonable, and this is something that you need to focus on. Obviously, the best part about this is as you scale up, you will find over time that the overheads start to drop, and you can lower this number. So this is quite high, because this is what people don't understand. If you're on your own, this is where you're one of the most expensive. Once you get to 3 or 4 people, you can start to bring this down, because at 3 or 4 people worth of income, you still only got one person for 60 grand in the office, and you've still got the $20,000 rent for the building. So that doesn't change, but the income goes up. So this can actually come down a bit if you need to. This is a sole trader rate. This is what you need to be charging so that you can put food on the table. 100 grand a year, 60 grand for an employee. That is your number. And if anybody wants to ask me any questions, please feel welcome to leave them in the comments. I'm Mitch Boerner from Legendary. I'll see you soon.